I've got a really good video for you today. So a family friend of mine decided to start her own business. It was for furniture importing and distribution. She had experience working in a similar business for about 10 years, so she thought she knew enough to go out on her own and start her own business. Naturally, starting a business is tough. In less than a year, she ran out of money, she needs to close the business, and probably needs to file for bankruptcy. She did have outside investors and partners, and they all probably lost their money as well. It's a very sad and tragic story, but there are some very important lessons that can be learned from all of this. As you probably know, most businesses are doomed to fail. In this video, I'm going to apply my business expertise and highlight my best business advice for anyone thinking about starting their own business. Hi, I'm Noel Lorenzana. I'm a CPA and I've been running or helping run businesses for over 25 years. I dedicate this video to my sons so that one day, if they start their own businesses, they might find this video useful. This furniture importing business that opened and closed and lost several $100,000 is a very sad story. The partners worked really hard at it, but just couldn't make it succeed. Now, they didn't use me as an advisor. I was just observing from afar. I'm not suggesting that they did or didn't do any of these things, but in the context of this business failure, here's my best business advice. Number one, grow slowly. With a new business, it's important to hit the ground running. You want to have a plan. A business plan is always ideal. Start small and grow slowly. And don't make decisions that risk everything. Learn as you grow. You know what they say, do, fail, analyze, and adjust. Always learn from your mistakes or from things that didn't quite go the way you thought they would. Just like how YouTube started off as a dating site, you need to constantly analyze your business and adjust. So my friend's furniture business, I believe, started off too ambitiously. They ordered multiple containers of products from overseas, which tied up their working capital. Some of these containers were held up by US Customs, USDA, and other regulatory agencies. Naturally, some items were even rejected. As you can imagine, this created a stressful situation since their money was tied up, and dealing with regulatory agencies can be very difficult. In my opinion, they should have started slower and ordered fewer containers. They could have ordered from other direct importers to give them the steady supply that they needed. Now, if you do that, the profit margins aren't as good, but you're also preserving your cash, and it does give you something to sell. And sales, they can't be overstated enough. Businesses succeed because of high sales. Businesses fail because of low sales, which leads me to number two, sell, sell, sell. Sales are the lifeblood of any business. You need to get good at selling and get out there to make those sales. As Brian Tracy puts it, the purpose of a business is to create and keep a customer. It's crucial to keep acquiring new customers and retaining the ones that you already have. New businesses need to focus on sales, sales, and more sales. Take this furniture business, for example. It's safe to say they didn't have enough sales. I think they probably also underestimated the competitiveness of the industry, and they were probably too over-optimistic on their ability to generate sales. It's a really competitive business environment out there right now, with inflation wreaking havoc on input costs like materials and labor, transportation, etc. I don't know how much they focused on sales, but they definitely should have focused all of their energy on increasing sales. As a side note, right now, I think you're better off buying a business from someone retiring rather than starting your own. This is actually something that I'm keeping my eyes open for. Number three, be frugal. You need to be frugal in business. Spend money as if you were going out of business. Hold on to every dollar as tightly as you can. When it comes to office equipment and furniture, buy it used as much as possible. Don't buy anything new if you don't have to. Money is the lifeblood of a business. If you run out of money, your business will fail. So it's important to be frugal, especially if your sales are struggling. If you're a brand new business with a good amount of capital, you might think it's no big deal to buy new office furniture, computers, other office furnishings. But anyone in business knows that money can dry up very fast, and it's difficult to get new money into the business. Take this new furniture business, for example. They started off with at least several $100,000 in working capital, and sadly, I think it's all gone. Another good piece of advice is that whatever amount of money you think you'll need to start a business, double it. it usually takes twice as long to be profitable than you originally thought. And the worst thing is, running out of money just when you're getting close to succeeding. I think it's safe to say this furniture business was undercapitalized as well. Number 4, competence. You must be very good at what you do, and you must know your industry inside and out. This is what sets you apart from everybody else. In the case of the furniture business, they had 10 years of light industry experience, which gave them a level of competency. However, some competency alone will not lead to successful business results. The business also had a partner with marketing expertise, I believe, but neither of the owners had experience in actually running their own business. At least I don't think. Learning as you go can work to some extent, but having competency in both your industry and in running a business is crucial. If you don't have those skills, you need to acquire them as soon as possible, or hire someone or consult with someone who does. This also brings to mind the Dunning-Kruger effect, which can give us a false sense of overconfidence. This happens when people with limited knowledge or experience think they know more than they actually do. It's like knowing enough to be dangerous, but not knowing quite enough. Because of this overconfidence, business owners might not seek the help or education they need, leading to mistakes and setbacks. Understanding that you don't know what you don't know is key. It helps you make better decisions and encourages you to find the right expertise when you need it. The longer it takes you to get up to speed, the more cash you're burning through, so you really don't have much time to learn on the job. Number 5, know your numbers. Kevin O'Leary from Shark Tank loves to stress the importance of knowing your numbers. Fundamentally, you need to know where your sales are coming from and what you're spending your money on. This is achieved through an effective bookkeeping and accounting system. This shouldn't be overlooked. By the way, I do have an excellent mini course on bookkeeping basics for people just starting out. I'll link that either up here or down below in the description. So you need to continually track where your money is coming from and where it's going. This is essential because, as we all know, cash is the lifeblood of your business. Take my friend's furniture business, for example. I suspect they really didn't know their numbers well. How do I know this? I did have a chance to look over their tax return, and I found many mistakes. It wasn't even funny. Whether it was their accounting system or their tax preparer, their tax return was a complete mess. It's important to know that in business, your accounting must be accurate. The numbers from your accounting process, specifically the profit and loss statement and the balance sheet, these flow directly to the tax return. If the accounting system numbers are wrong, the tax return will be wrong. One of my favorite business tips is to take the profit and loss statement and reverse it. Instead of having the net income or bottom line figure at the bottom, put it on the top of the page. With the thinking, this is the money that you intend to make. From that, you can figure out the sales you'll need to generate that figure. You'll know how low your expenses need to be as well. It's a concept called working with the end in mind. Try it out, it can change your life. Going back to this furniture business, it's a very sad story, but a story as old as time. It's not true what they say. That is, if you build it, they will come. This isn't ancient wisdom. These are clever movie quotes from Wayne's World and Field of Dreams. Now, I hope my friend can bounce back and hopefully her relationship with her partner friends is doing okay. And that's another story. You'd be very careful going into business with friends because the business doesn't work out. Well, it naturally strains the friendship. Don't forget to like and subscribe, and please share your thoughts with me in the comments section below, especially if you have any of your own business advice you'd like to share. Thank you for watching, and see you in another video.